Hello everyone, welcome to our presentation on the audit plan for green grow gardening suppliers. This audit aims to assess the company's financial health, internal controls, and potential risks while providing recommendations for improvements. I'm Hasara and we are from group number 20. So let's begin. Green Grow Gardening Suppliers is a small business specializing in gardening and agricultural products. With 16 employees and annual revenue of 22.3 million, it operates both in store and online. The company manages its inventory through single warehouse and uses QuickBooks for accounting. Our audit will evaluate financial position and risk factors to help improve its efficiency decision making. Our audit timeline spans 15 weeks covering key stages: planning, risk assessment, testing, field work, analysis, reporting, follow-up. The structured approach ensures through an effective audit process for green grow gardening suppliers. With that overview, let's move forward to the financial summary and risk assessment of green grow gardening supplies. Over to you, Chanuri.
Today, I will be presenting the risk assessment for our audit of green grow gardening supplies. Let's look at what is risk assessment and why it is important. Risk assessment is a crucial step in the audit process as it helps to identify areas where material misstatements in financial statements. By understanding these risks, we can develop targeted audit procedures to ensure the accuracy and the reliability of financial statements. When it comes to financial overview of green grow gardening supplies, there is a positive trend in gross profit margin and net profit margin. Gross profit margin has increased from 39% to 41.7%, and net profit margin has increased from 7.6% to 12.5%. According to the financial report summary, we have to consider inventory turnover ratio, days sales outstanding, and current ratio as well. Then I will explain risk assessment for the audit of green grow gardening supplies. There are three key audit risks can be identified here, such as inherent risk, control risk, and detection risk. Under inherent risk, risk factors are seasonal sales, inventory issues, online sales fraud. Seasonal sales reflect revenue fluctuations with gardening seasons. It is highly impacted on material misstatements in financial statements. Inventory issues means perishable and obsolete stock can cause losses. It is also highly impacted on material misstatements. Online sales fraud reflect risk of fake transactions and chargebacks. It has medium impact on the material misstatement in financial statements. Then control risk. Risk factors are poor duty segregation, weak inventory controls, and cash handling issues. Poor duty segregation means one person handles multiple tasks. It may leading to increased fraud risk. It is highly impacted on material misstatements. Weak inventory controls reflect errors in stock records may lead to misstatements. It has medium impact on material misstatements. Cash handling issues means theft or mismanagement of cash sales. It has also high impact on material misstatements. Last one is detection risk. The risk factors coming under detection risk are weak audit trail, manual errors, expense, misclassification. Weak audit trail is leading to poor records that make fraud harder to detect. It has medium impact on material misstatement in financial statements. Manual errors reflect human mistakes in financial reporting. It has medium impact on material misstatements as well. Expense misclassification means incorrect reporting of expense affects accuracy. It has high impact on material misstatements. These risks highlight potential financial misstatements and control weaknesses. Addressing them through strong audit procedures will enhance Greengrow's financial accuracy and reliability. I'm handed over to Indumini to continue the presentation.
I'm going to talk about how to assess risk. Risk assessment is essential for business successes and stability. It involves identifying internal risks such as inefficiencies and technology weaknesses, and external risks like market changes and regulatory shifts. Next, the likelihood of these risk is evaluated using past data and trends. The impact is then assessed in terms of financial, operational, and reputational consequences. Finally, risks are prioritized using a matrix and allocate resources effectively and strengthen resiliency. As a continuous process, risk assessment ensures businesses remain prepared, competitive, and adaptable to uncertainty risks. Thank you. Over to you, Sandhani.
Thank you, Yamini. Today I will be discussing the importance of designing controls within an organization to ensure efficiency, security, and accountability in financial and inventory management. Implementing the right controls help prevent fraud, errors, and mismanagement while promoting transparency. Let's take a closer look at some key control measures. The first one is segregation of duties. One of the most effective ways to reduce risk is by separating responsibilities. In this organization, we ensure that cash handling, accounting, and inventory management are assigned to different individuals. This prevents any single person from having excessive control, reducing the risk of fraud or manipulation. Second one is authorization and approval. To maintain financial discipline, we require managerial approval for inventory purchases above 5,000. This control ensures that all significant purchases are reviewed and justified, preventing unauthorized spending and unnecessary stock building. Third one is reconciliation procedures. Reconciliation is a critical aspect of financial integrity. We implement daily reconciliation of cash, bank transactions, and inventory records. By doing this, can quickly identify discrepancies, correct errors, and maintain accurate financial statements. Last one is safeguarding assets. Protecting our assets is essential. To enhance security, we have installed surveillance cameras in our warehouse. Additionally, access to inventory storage is restricted to authorized personnel only. These measures help prevent theft, unauthorized access, and loss of valuable assets. Over to you, Dirisha.
Thank you, Sandhuni. So now we are going to talk about control types in risk management. I am ST Dilshan. Let's move on with the presentation slide. First one is preventive controls. When we come to preventing controls, which aims to stop errors and frauds before they occur. These controls are proactive and designed to reduce the likelihood of risk happening in the first place. Let's see the few examples. First one is system access restriction, which limit access to sensitive data and function to everyone and only be authorized to few personalities only. The second example is segregation of duties, which ensures that critical tasks are divided among multiple employees to prevent fraud and errors. Let's look at the second control called detective control. Even with the preventive measures in place, some risk may still occur. That is why detective controls come to play. These controls are reactive and help identify and report errors or frauds after they have happened. Few examples: audit logs, which track all system activities and they can highlight suspicious behavior. Reconciliation reviews, which compare financial records to detect discrepancies and ensure accuracy. Let's move on with the final controls called corrective controls. We have corrective controls which address the issues identified by detective controls. These control helps to mitigate the damage caused by errors or fraud and prevent similar issues from recurring. Let's see a few examples. Updating system process, such as implementing strong security measures if a breach occurs, retaining employees, ensuring that staff understand policies and procedures to avoid repeated mistakes. So this is all about the slide of the controls. We go into three. And now I will hand over this presentation to Kushani Disanayake to move ahead with the next slide. Thank you so much.
Thank you, Dilshan. Now move on audit procedures for testing internal controls at Green Grow Gardening Suppliers. As a company that deals with gardening products, inventory management, sales transaction, and cash handling are critical to operations. Strong internal controls helps to maintain accuracy, prevent fraud, and ensure compliance. In this section, I'll walk you through 6 key audit procedures we use to test these controls. First, we conduct transaction testing by selecting sample transactions from high-risk accounts, especially sales, purchases, and inventory. Since GreenGrow deals with bulk inventory movements, we can verify that all the recorded transactions are accurate, timely, and actually occurred. This helps us ensure proper financial reporting. Next, we perform a documentation review. We examine key documentation such as sales invoices for customer transactions, customer order to confirm fulfillment, delivery receipts to verify inventory movements. At GreenGrow, maintaining proper documentation is crucial for tracking supplier deliveries, customer shipments, and payment processing. To assess whether internal controls are functioning as intended, we perform control effectiveness testing. These include monitoring inventory adjustments to ensure stock changes are reviewed and approved, checking if purchase approvals are constantly followed. With GreenGrow's large inventory, these steps ensure that stock levels are properly managed, reducing this risk of wastage or mismanagement. A walkthrough is another key procedure. We track transactions through QuickBooks, following them from initiation to financial recording. This helps us understand the transaction flow, identify any process gap, and ensure that GreenGrow's accounting system is accurately reflecting business operations. Observations allows us to verify compliance in real time. At GreenGrow, we focus on physical inventory counts, ensure stock is checked and matched with records, daily deposits, cash handling procedures, confirming that payments and cash flows are managed securely. Since GreenGrow deals with both cash and credit transactions, proper observation helps identify any risk or inefficiencies in these processes. Finally, we conduct performance testing to ensure financial accuracy. These include reperforming bank reconciliation for selected months to confirm accuracy, recalculating the inventory turnover ratio, ensuring efficient stock management, verify payroll computation for chosen employees, checking that salaries are correctly processed. For GreenGrow, accurate inventory turnover calculations are especially important to avoid overstocking or stock out in peak gardening seasons. By applying these 6 audit procedures, we can assess whether Green Grow Gardening suppliers' internal controls are effective, reliable, and well managed. Thank you. Over to you, Malki.
Thank you, Ushani. The relevance of an audit plan to practitioners. So now I will explain about why an audit plan is important for auditors. First one, audit plan helps us improve the quality of our work. It guided us in focusing on the areas that might have the higher risk, making sure we don't miss anything important. Second one, it plays a key role in detecting and preventing fraud. With a solid plan, we set up internal controls that help prevent dishonest activities and catch up problems early. Third one, it builds trust with our clients. A clear and transparent audit process reassures clients that their financial statements are accurate and reliable. Last one, an audit plan ensures we meet all compliance and regulatory requirements. It helps us to follow the rules and keep the necessary documentation which is essential for doing our job right. In summary, having a strong audit plan is crucial for doing effective work, preventing fraud, gaining client trust, and ensuring the compliance. Now, I over to you, Dilshan.
Thank you, Marky. Let's move on to the final part of this presentation, audit responsibilities. So when we talk about audit responsibilities, we have 5 characteristics to go through. The first one is professional skepticism. What is professional skepticism? Approach all financial data with a questioning mindset, ensuring no assumption compromise the audit. So when we come to the rational mindset, question mindset, when it's come to the audit, we always do the audit based on the true and rational data and the factors, not in the assumption mode. Moving on to the second one, planning and designing procedure. Design tailored tests for green crow suppliers' specific risk, ensuring that efficient and compliant audit. Third one, evaluating internal controls. Access control for rebootness in mitigating identifier risk, such as inventory discrepancies. When it's come to the inventory discrepancies, we have to make a good policy, have to identify inherent risks. When it's come to the inflow of the inventory and outflow of the inventory as well, reduce the discrepancy. Reporting findings. Communicate weakness, example, insufficient inventory controls and recommended updates to process systems. Final one, compliance with the standard. Adhere to the ISA guidelines, ensuring that the audit meets regulatory and ethical standard. When it's come to green growth suppliers as other corporates, we should have a good compliance that regulated with the institutions to comply with all the ethical standard when it's come to the audit and other operation. So this is all about our audit and professional practice presentation. Thank you so much, dear lecturer and my dear colleagues. Have a wonderful day.